like to take up the liquidity and financial market conditions. The level of surplus liquidity in the system has gone up in the recent months on the back of the return of rupees 2,000 banknotes to the banking system, RBI surplus transfer to the government, pickup in government spending and capital inflows. The overall daily absorption under the liquidity adjustment facility, that is LAF, was 1.7 lakh crore in June and 1.8 lakh crore in July this year. Despite such surplus liquidity, market response to RBI's 14-day variable rate repo auctions, that is VRRR auctions, was lukewarm. Instead, banks preferred to place their surplus liquidity in the less remunerative standing deposit facility, that is SDF. Although the fine-tuning VRRR auctions of 1 to 4 days maturity during this period evoked better response from the market. This essentially, let me just read it again. Although the fine-tuning VRRR auctions of 1 to 4 days maturity during this period evoked better response from the market, this essentially reflects greater risk aversion among the banks to park large funds under the main operation. In this context, it is necessary to reiterate that fine-tuning operations, that is overnight operations up to 13 days, are undertaken to deal with special or exceptional situations and cannot become a rule. In recent years, our stated stance on liquidity is to maintain adequate liquidity in the system to meet the productive requirements of the economy. Excess liquidity, on the other hand, can pose risks to price stability and also to financial stability. Hence, efficient liquidity management requires continuous assessment of the level of surplus liquidity so that additional measures are undertaken as and when necessary to impound the element of excess liquidity. Accordingly, it has been decided that with effect from the fortnight beginning August 12, scheduled banks shall maintain, I repeat, scheduled banks shall maintain an incremental cash reserve ratio, that is ICRR, of 10% on the increase in their net demand and time liabilities, that is NDTL, between May 19th and July 28th. I would like to read this sentence again so that the message gets across. It has been decided that with effect from 12th of August, scheduled banks shall maintain an incremental CRR, that is ICRR, of 10% on increase in their NDTL between May 19th and July 28th. And what I'm now going to say is equally important. This measure is intended to absorb the surplus liquidity generated by various factors referred to earlier, including the return of rupees 2,000 notes to the banking system. This is purely a temporary measure for managing the liquidity overhang. Even after this temporary impounding, there will be adequate liquidity in the system to meet the credit needs of the economy. We have reviewed the position, and on that basis alone, on the basis of our internal assessment, I am making this statement that even after this temporary impounding, there will be adequate liquidity in the system to meet the credit needs of the economy. The incremental CRR will be reviewed on 8th September or earlier with a view to returning the impounded funds to the banking system ahead of the festival season. I must add that the existing cash reserve ratio, that is CRR, remains unchanged at 4.5%. I would now